Pin Bar Candlestick Pattern. Hey guys, and welcome back to a new video on Tradingfyive. This is the channel that provides you with various informative content on the stock market and technical analysis. And this video is about a candlestick pattern which is called as Pin Bar. This is a candlestick pattern which is often used to identify reversals in the market. It can be a bullish reversal where the downtrend becomes uptrend, or a bearish reversal where the uptrend becomes downtrend. We can use the pin bar candlestick pattern to identify the bullish or bearish reversal in the market and make money on them. And in this video, I am going to explain you every detail that you should know about the pin bar pattern. Right from what is this pattern, how do you identify it on the chart, how to use it, where to place the buy order, where to place the stop loss, what will be the risk if you trade on the pin bar candlestick pattern, everything in this video. So now you know, if you want to learn something new in technical analysis, if you want to level up your skills in technical analysis, if you want to know how to make money precisely in the market, you don't want to skip this video. Make sure that you watch it till the end, and if you find anything valuable, anything that can add value to your trading, make sure that you subscribe to this channel and press the notification bell. And by not wasting much time, let us start with the video by understanding the pin bar pattern. You know, pin bar is a single candlestick pattern. That means this pattern is formed out of a single candle. And let me tell you that the pin bar pattern is basically classified into two categories. First one is the bullish pin bar pattern, and next is the bearish pin bar pattern. You can see on the screen that's how this pattern usually looks like. And this is obvious that the bullish pin bar pattern will indicate a bullish reversal and the bearish pin bar pattern will indicate a bearish one. This thing is quite understandable. Now let us understand each pattern precisely, and let's start with the bullish one. Now as you can see on the screen, this is a bullish pin bar pattern, and one thing you can notice about it is that the small body of this pattern. That's right, the pin bar pattern, either bullish or bearish, has a very small body. There is very little difference between the open and close of the candle. Second thing about this pattern that you can make out is its long shadow. Now let me tell you that in pin bar pattern, one of the wick of the candle is very long. It can be either a lower wick or upper wick. And in bullish pin bar pattern, the lower shadow, the lower wick of the candle is long. So if you find a candlestick pattern with small body and whose lower wick is long, it has to be bullish pin bar pattern. So these are the two criteria that you have to keep in mind while analyzing the chart if you want to figure out the bullish pin bar pattern. The third criteria that you can see is the small wick at the top of the candle. That's right, the bullish pin bar pattern has a long lower wick, but the upper wick of the pattern is very small or almost not present. Okay, so that is about the structure of this pattern, how you can identify the pattern. Now one more thing let me tell you about the bullish pin bar pattern is that the color of the body, the color of bullish pin bar pattern is not required to be green. It can also be red. Yeah, that's like the color doesn't matter for this pattern. The position of the body and the length of the wick actually matters. So just remember that if you find a small body with a long lower wick, irrespective of the color of the body, it can be green or red, it has to be a bullish pin bar pattern. That's all about the structure of this pattern. Now let me show you how you can actually take a trade using bullish pin bar pattern. You can see on the screen there is a price which is falling down, and after that you see a bullish pin bar pattern. Now let me make one thing clear is that if you are looking for a bullish pin bar pattern or any bullish reversal pattern, the market first has to be in a downtrend even before the pattern occurs. This is basically a criteria or prerequisite for any bullish reversal pattern. Now let me tell you that when this candlestick pattern is formed, you directly don't want to take a trade on it. You have to wait for a confirmation. That is, after this pattern is formed, if a green candle occurs, that is where we get a confirmation for the pattern. That means the accuracy and reliability of this pattern is correct. We can look forward to take a trade on it. So at the closing of this confirmation candle, we will look for buying the stock. And we will place the stop loss near the low of the pin bar candle. So now you can see the difference between the buy price and the stop loss will be our risk. And if the trade goes according to your analysis, if the stock performs well, you will make a profit in the trade. But if in case you actually go wrong, your stop loss will hit and you will exit the trade with a very small loss. And this is the reason why I say that stop loss is very important while trading. Stock market has the potential to give you huge reward as well as huge loss. So to prevent that huge loss, we use the stop loss. Okay, so that is exactly how you take a trade on bullish pin bar pattern. Now let me give you one pro tip, a professional advice, that is, longer the wick of the pin bar candle, stronger the pattern. Just remember this, if you find a pin bar pattern with a long wick, it simply means that the pattern has good strength and potential in it. And there you get a confirmation in itself for buying the stock. Okay, now let's look at the bearish pin bar pattern. Now as you can see on the screen, that is a bearish pin bar. And even in this case, you can notice it has a small body, just like the bullish pin bar pattern which we saw previously. But one thing that is different is the position of the shadow. In bearish pin bar, we get a long upper shadow. That's right, The upper wick or the upper shadow of the bearish pin bar pattern is huge in length. And the third thing about this pattern is almost no wick or a small lower wick. So this is how you can identify a bearish pin bar pattern: a small body, long upper shadow and a small lower wick. And also in this case, the length of the upper shadow decides the strength of the candle. That's right. If you find a bearish pin bar pattern with such a long shadow, it means that it has huge potential to push the market down. There are high chances that market will take a bearish reversal. The uptrend will be converted to the downtrend, and here you can take a trade on it. And just like in the previous case, the color of the candle doesn't matter. The bearish pin bar can be red or it can be green. One thing that really matters is the size of the body and the length of the shadow. Yes, that's right. So now let me show you how you can actually take a trade on bearish pin bar pattern. Now as you can see on the screen, a price which is in uptrend, and at the top of this trend a bearish pin bar is formed. Now the one thing that is really necessary for a bearish pin bar or any bearish reversal pattern is that before the pattern is formed, the market has to be in uptrend. Yes, exactly. So just remember that if you find a bearish pin bar pattern in a downtrend or in sideways trend, it has no meaning. The one that is formed after an uptrend is the most accurate. So now you can see on the screen a bearish pin bar has been formed. But we know that we have to wait for confirmation of this pattern. That is, after this pattern, if a red candle is formed, this is exactly where we get an indication that market is going to take a reversal from here. So we take a short trade at the high of the confirmation candle and place a stop loss at the high of the bearish pin bar. And if our analysis goes correct, the market will go in a direction. We will be making profit. But if in case the market goes against us, instead of taking a reversal, the market continues its trend, then we know that we have a stop loss in place. That will help us prevent a loss. That's correct. That's exactly what professional traders do. And so they never end up making a huge loss. So if you got to learn anything valuable in this video, you can show some gratitude by maybe subscribing the channel. So lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible, and to not miss such many contents on stock market and technical analysis, make sure that you subscribe to this channel. I will see you in the next video.